Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose. And this video is not investment advice. So this video is another technical analysis, candlestick chart online trading video, yes, where I'm gonna explain why I should have taken trades, what you should care about, and what you should avoid. Yes, those trades are based on those trades which those explanations are based on those trades which I have already done. Because like you see, the assets are closed. Yes, we have weekend. I do not have the OTC market because I'm a European trader, and so I do this educational videos to explain better how I analyze the market, how I do technical analysis, yes, and candlestick chart analysis. So, okay. But before I'm gonna start, all those things which I'm explaining and all those concepts are based on those things which I have explained in my ebook. Get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook, it's for free. You'll find the link in the description, and in the description we'll find also the link to the Facebook group. Okay, so let's see. Let's start. Don't waste time. And yes, here's the video. So first of all, the market condition. Yes, you should always understand the market condition before you're going to do any kind of trades. Yes, and here the market condition is not difficult. We got here a breakout. Yes, you see here the Bollinger Bands, a breakout. We got almost flat EMAs, and that's and here we got a reversal. Yes, and then we get here a downtrend till the 200 EMA, yes, and the 200 EMA is like the 261.8 Fibonacci level or the 160.18 Fibonacci level or the 61.8 Fibonacci level. That are levels where price will reverse mostly, yes. Also the 100 EMA, that are also levels where price often reverse because it's the 100 or the 200 day, yes, minutes or whatever, yes, low or high, yes, and that's the reason why those kind of levels are reversal points. So we got here a downtrend at this 200 EMA. We got the first reversal here. Then price is getting down again, but we have a flat 200 EMA and we have a flat 100 EMA. So price is looks almost like this, that it would range around this kind of two EMAs, yes, the 200 and the 100, and the other, because it looks like there was here before also a ranging market, yes. It's not that the EMAs are not how I can tell you, they are not steep, which means that there is not such a strong trend. So we're gonna touch this level. This wick here is higher and bigger than the first wick, yes, and so it's showing already that they are getting again buyers into, yes, into the market. So, and I will do play now, and as soon there is some kind of things to explain, I will stop the video and explain those things further. So I understood immediately, yes, okay, it was not the best type of trading, yes, but because this candle here, let me show you this, because this candle here closed above the 200 EMA, yes, and the lower shadow is bigger than the upper shadow, yes, it shows that we have here much more buying pressure, and because it's on the same level like this first bottom, yes, I was expecting here nothing else than a double bottom, yes, and that's the reason why I entered here into a call trade immediately, because I was expecting that price would shoot up further, yes, because of this double top forming. This candle here showed already that there could be a double bottom coming up, and that was the reason why I entered immediately into this trade after that one here showed me already that here are buyers coming in always. Yes, you see here a huge wick which shows buying pressure, and this wick here showed me also that there would be now some kind of reversal or retracement, and that's the reason why I entered into a call. So let's see what's happening. Almost it would have been better, yes, if I would have entered a little bit lower, yes, because that is what I tried to always to explain you. Try to get above or below the previous closing price candle, yes. I entered immediately because I was sure that price would close above the 200 EMA, because it's ranging market. It's not a strong trend market. If the upper wick would have been greater than the lower wick, I would have done probably a put. Yes, but in this case, it was clear to me that price would retrace back, and and it would be this kind of double bottom forming. Yes. So let's see what's happening. Yes, and at the end, price was pushed down again. So I entered immediately again into this call. Yes, because that is what I have explained often. If you get a reversal, yes, or retracement, but mostly reversal, and you can understand the retracement from a reversal. This candle here, if this wick here would been bigger, yes, if this wick was bigger than this one, yes, it would be a clear put. Yes, but in this case, they are almost equal. Yes, they are almost equal. That is an indecision candle. And if you get after such kind of downtrend here, an indecision candle, you can almost expect that there will be a reversal if there would be something like this happening here. Yes, you see here, we tested this support level, this 200 EMA already a few candles ago. That means that we get here, yes, a strong level, yes, and then price gets back to this, and then there came up this kind of indecision candle. That is a good sign that price will reverse again, and mostly it's in this case so that if you get a reversal or a retracement at a key level like the 200 EMA, 100 EMA, I'm explaining this over and over again, and also the 261.8 Fibonacci level, the 161.8 Fibonacci level, or the 61.8 Fibonacci level, you get such kind of indecision candle at these key levels, you can almost expect that price will retrace for more than one candle. I have explained this, but you should have the right market condition. Don't do this kind of things if you have a strong trend. Yes, if you have a trend, or not even a strong trend, it's also with a normal trend, it should be only at ranging market, yes, or nearly ranging market. You see those things on flat EMAs, and if price is far away from the 2 deviation Bollinger Band. You see how far away we are from the 2 deviation Bollinger Band. We are closer to the 1 deviation Bollinger Band, and then you could expect here this kind of reversals happening. Yes, much more likely than a continuation. Yes, because I see often traders doing here continuation trades at the 1 deviation Bollinger Band, far away from the 2 deviation Bollinger Band, without any kind of support level. Yes, or with the support level. Yes. And then it will happen that those one will be trapped in a reversal, yes, because in this kind of area it's not likely to do. It's not likely to do a continuation trade. Yes, you are far away from the 2 deviation. We are here at the 1 deviation. Don't do in this kind of conditions any kind of continuation trade expecting that price will continue, the trend will continue. Yes, don't do this, and that is what you should take out of this kind of trades here. And so let me continue here. Obviously, I entered here immediately again into this trade. Yes, it would have been better to enter later on this trade at this level here. Yes, at the 200 EMA. But I was expecting here also that price would shoot up. Yes, but it hasn't done this. and it retraced a little bit before it goes up, that are almost the best trades. So okay, so let's see what's happened here. I entered really early, so there are another minute of time till the expiration time will end. So and so you can observe the candle exactly. You see it's getting a rejection from the 1 deviation Bollinger Band. Yes. And there is some, this looks like a consolidation area here. Yes, it's almost consolidation. You see it's already that they are starting the Bollinger Squeeze. Yes, the Bollinger Squeeze, what's happening here. So yes, and you see how market is going up, down, up, down, up, down. Yes, and then we got a rejection. Yes, and you see at the end it was really close in the money, and that was the cause. Yes, and that, let me see here, let me show you this, what I have done then. Yes, I was a little bit surprised that this was only a doji. Yes, and but then I understood that price was rejected by this round number. So, and I entered then into a, yes, into a call after price was below the entry point, below the closing price of the previous candle. Like I have explained, on a previous bullish candle, you should try to enter below the closing price. On a bearish previous candle, you should try to enter into above this closing price of this candle. So on a bearish candle, so previous bearish candle. So let's see what I'm explaining here is this. Why I have done a call. I have done a call and not a put because this candle showed me that we have still buying pressure because we got here this round number, which is not really a round number, but because round numbers are those one with the zeros at the end. Yes, but you see in this case we have a 1.1705. Yes, and that is an odd number, but this odd number is still a whole number or round number because price is acting on it. You see here resistance, support, support, yes, and resistance. Yes, and that's the reason why I was expecting now a fake breakout, yes, of this round number again. Yes, and this candle got this doji only because it got a rejection from this round number, and that's the reason why I entered into a call and not into a put expecting an evening star. Yes, because evening stars should be only traded at the end of an uptrend. And morning stars, you should trade almost at the end of a downtrend. Yes, and what do we have here? We have here a downtrend. So what the only thing what you should trade here should be a morning star. But I'm trading this morning star because I saw a rejection from this round number. I saw the rejection from the 200 EMA. We got here a second test of this 200 EMA. So this 200 EMA is, in my opinion, or when I have done this trade, much stronger than this round number, which was often broken after the first touch. You see here first touch of this round number and broke. Yes, and it breaks through this. Yes, okay, then that was two touches and it broke, and now we got again here two touches. Yes, and I'm expecting that this will be broken again, and that was the reason why I entered here into, okay, let me put this back. I entered here into a call after this doji, so I forgot to stop the video. So I entered here into this trade because of this kind of doji and this round number. So okay, let's see what's happening. Obviously, you have seen we have here a strong support and resistance level, which was confirmed based on this kind of resistance, support, support, resistance. Yes, that's the reason why price is retracing back from this level again. Yes, but because I was still expecting here some kind of double bottom, I entered again into a call. So, and after this, I entered again into a call. Yes, you see, we have here already, or I have done here already three trades. 4 trades with this one, yes, almost all on this. It was this, and now also this, yes, and all on the 200 EMA, yes, because it was the second touch. Now this candle here, this one, is telling me that price will go up further. Yes, we are still at this key level. You see how price stop all the time above, exactly on the support and resistance level. Yes, exactly on this level, but this candle now is showing me that we have still buying pressure. It's a small pin bar, yes, and this pin bar is yes, that is what pin bar is showing buying pressure in this case. Yes, we got a rejection from the 200 EMA. We stopped exactly with a bullish candle. Yes, it's a small bullish candle, yes, but it's still bullish, yes, at this key level, and that was the reason why I entered into call trade at this level, because now I was expecting that price would retrace from the 100 EMA, because it's ranging. Yes, we got 1, 2, 3, 4 rejections, four times price was not able to break through the 200 EMA, and now it was clear to me that price will go up, and that's the reason why I entered again into a call. You see here 4 trades, all call, almost the only, because yes, it was tiny candles, but the entry point was here again important. So let me do play again, and as soon as there is also this level, entry point was below this. So, and now we got here 3 touches of the support and resistance level, this round number, which was a strong one. Yes, you see how often price retrace here, resistance, support, support, resistance, resistance, resistance. Yes, and after so many touches, it was clear that price will break through it. The market is still doing some kind of panic, yes, but every support and resistance level will be broken at any point if there will be over and over touches and touches, yes, and because they are almost all from the same side, yes, that was almost resistance. So now I'm doing a trend line here, because I understood that there would be something. I saw this kind of movement here. So let me show you this. So almost now, yes, after we got here so many touches, yes, and it doesn't broke, and you see how close this end in the money was, only because I entered immediately into this trade, and it was because the next candle started with a gap down. Yes, I understood that this double bottom, sorry, that this double bottom will not appear. Yes, I was all the time expecting that there would be a double bottom, but at this level I have missed, or I have forgotten, or how, I don't know how it's called. I forgot. I was not anymore behind a double bottom. Yes, because this wick here, this wick here, with the rejection from the 100 EMA, this kind of gravestone doji was, or is telling me now that price will not go up, that there should be something what I do not see. Yes, it was not anymore this kind of support and resistance level here, yes, which was interacting here. I understood there should be something else, and then I saw this kind of yes, this kind of trend line, yes, this trend channel, and that was the reason. Trend channel in this case, it's not only a trend channel, it's also a descending triangle. Yes, you see here the 200 EMA is this one, and price is here in between of this, yes, of this descending triangle. And as I saw this kind of gravestone doji, I understood. I was drawing it, yes, and I saw also how the candlestick is moving. Yes, I understood that this would be a put here, yes, because of the rejection from the 100 EMA in this kind of consolidation area, this over uptrend, this not unfolding double bottom. Yes, that is important. Yes, I have explained this maybe also in one of the previous videos, where I have explained that you should understand the candlesticks which are running, those running candles which are not unfolding like you expect. I was here all the time behind because doji after a spinning top shows indecision, so it was a clear call for me. Then I got a pin bar, a bullish pin bar. It was still a clear call to me, yes, but after I saw this kind of candlestick, I understood, okay, the uptrend is over here. This minor uptrend is over, and yes, and so you have to adapt, yes, and you have to do a put now, because it's not anymore going up. There will be not a double bottom, yes, and that is what I try to explain you here, that you should adapt your trading to that what market is telling you. I have to say, I was really often here lucky. You have seen it was really in the money buy here. I could have done these trades most better if I would have traded them with rejections. Yes, because I get often questions about rejections. Please show us candlestick patterns without rejection. Please show us support and resistance levels without rejection. I know rejections could be tricky, yes, but if you trade them with rejection in the right direction, yes, it's almost better. So that I try to eliminate this kind of image here below, yes, but this was on the video. Okay, so that was it already. I hope I have brought it a little bit clearer, much closer to you, this kind of concept of best entry point, the technical analysis of candlestick pattern, your expectation about what candlestick will appear next, based on those chart patterns which I have explained in the ebook, and the ability to be flexible, to adapt to the market changes, yes, and don't pretend that any kind of chart pattern will unfold like you expect this, yes. Mostly you see a chart pattern and then it will not happen, yes, and you see it was here forming something like it would look like a double bottom, but it was not a double bottom. It was only the consolidation area in this kind of descending triangle, and that is what I want to show you with this video. So okay, that was it. If you like this video, do a like. If you didn't subscribe to my channel, and if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.